Hey, what's up guys? John here. What is happening right now in the economy that you don't know about is absolutely unbelievable, because what we are going to see is a complete U-turn, whether it be in stocks, real estate, everything. Your 401k, it's all going to start to skyrocket in the short term if this in fact happens. This entity that is telling the Federal Reserve to decrease interest rates has as much or more authority than the Fed himself. And so what is this going to do? We could start to see more people have less confidence in the US dollar, less confidence in saving money. And what are they going to do with that money? They are going to put it into hard real assets such as real estate, and they're also going to be buying precious metals as a hedge against the US dollar, because people are just simply not going to trust the stability of this reserve currency, this greenback, if they follow what they're saying right here in this article. I'm going to walk you through exactly what's going on. It's really unbelievable. And interestingly enough, Chamath Palihapitiya, one of the early Facebook founders, multi-billionaire, he came out yesterday or the day before saying that this is the bottom, that prices are going to start to skyrocket. And maybe he knew about this, maybe he didn't, maybe it was just a guess. But if this happens, then that's exactly what is likely going to happen. This will be the bottom and things will start to skyrocket. Take a look at this. They accuse the richest countries of imprudent gamble and inflation fight. And please hit that like button. When you hit the like button, YouTube's going to share this content to educate more people about what's really going on in the economy. The interest rate rises and austerity the world's richest nations are using to fight sky-high inflation risk, a painful global recession that would hurt developing countries the most, they warned. In its annual Trade and Development report, the Conference on Trade and Development said a drive by major central banks to ramp up rates in response to soaring prices represented an imprudent gamble that could dangerously backfire. The agency said an urgent course correction was required to prevent a cascading series of crises of debt, health, and climate emergency for poor countries struggling to cope with economic hit from the pandemic and Russia. Now, you might say, well, climate emergency, well, what are they going to do with that? How does that impact, or what difference would that make on interest rates? How would that make a difference? Well, take a look at what's happening in Europe right now. This is from foreignpolicy.com. With winter coming, Europe is walking off of a cliff. And they said their establishment of new European Hydro Bank and new support for electric vehicles, European Union members, their states, meanwhile, they're nationalizing utilities, setting up electricity prices, and subsidizing consumers. The EU policies do not represent a significant departure from the policies that got the continent into the energy mess in the first place. So what is nationalizing utilities? This is a new term. We haven't heard about this recently. Nationalization is the process of taking privately held companies, industries, or assets and putting them under the control of the government. So when you take an asset, you put it under the control of the government, such as utility companies. How much authority does that entity have over the value of your property? If you have an apartment building and the utility prices are increasing by 50, 100, 200, and 500%, or decreasing by 500%, that will have an impact on the affordability of the renter inside of that unit, obviously. And if this is happening in Europe, and we're hearing about this happening in Puerto Rico, the big question is, could we be seeing this type of activity in America, throughout the states of America? It's the big question. Because if we start to move in this direction, where they are saying that this is the problem, we need to handle the debt crisis, health, and climate crisis, it would make me suggest that this could actually happen here. The intervention comes as global central banks sharply increase interest rates to combat inflation at the highest levels in 4 decades. The U.S. Federal Reserve is weighing a further sharp rise in rates from next month, alongside similar moves by the Bank of England and the European Central Bank. However, UNCTAD said political leaders and central bankers in advanced economies were making the mistake of harking back to hawkish policies used in the 1970s and 1980s to squeeze inflation out of the system, which it said were inappropriate for the world's current juncture, challenging the assumption that the sharp monetary shock administered by central bankers was required. It said much of the current inflation burst was driven by soaring prices for energy, food, and the friction of global trade, rather than the excess demand for goods and services. The report said measures including strategic price controls, windfall taxes, antitrust measures, and tighter regulation on commodity speculations were needed to combat inflationary pressures at sources without pushing poorer countries over the precipice. And that's exactly what the monetarypolicy.com is saying. right? That's what they are doing. The report said that measures, I'll read it again, measures including strategic price controls, windfall taxes, the antitrust measures, and tighter regulation on commodity speculation were needed to combat inflationary pressures. That's exactly what is happening right here. That is exactly to a T what is happening right here. Almost the same text. The body said interest rate increases from the Fed were expected to cut an estimated $3.6 trillion of future income for developing countries, excluding China, and signal even more trouble ahead. The report notes that countries that were showing signs of debt distress before this pandemic are taking some of the biggest hits: Zimbabwe, Suriname, Sri Lanka, climate shocks, further threatening economic stability, Pakistan. The real problem facing policymakers is not an inflation crisis caused by too much money chasing too few goods, but a distress crisis with too many firms paying too high dividends, too many people struggling from paycheck to paycheck, and too many governments surviving from bond payment to bond payment. Higher interest rates from the Fed have helped fuel a sharp rise in value of the dollar against other currencies, putting pressure on poor nations on the prices of goods imported from overseas, as well as the cost of servicing their debts. There's still time to step back from the edge of a recession, said Rebecca, the Secretary General from UNCTAD. We have the tools to calm inflation and support all vulnerable groups. This is a matter of policy choices and political will, but the current course of action is hurting the most vulnerable, especially in developing countries, and risks tipping the world into a global recession. So, if you look at what they're saying, you look at what's actually happening right now, I believe that it is highly possible that we see a Fed U-turn, and if this does happen, we will see a rebound in the markets like you couldn't imagine, because there's just going to be so much money pouring into the markets simply trying to chase that yield. People are going to realize that, hey, the money printers are back on, they're turning the faucet back on, everything is going to start going sky high, and for the short term it probably will. But for long term, for America, for the dollar, I think what's likely going to happen is we are going to really get off the reserve currency over the next decade if they follow this. If they follow this, I believe we are going to see really big problems for the dollar over the long term. What do you think? Where do you see this entire situation going? They were saying just the other day that we were going to increase interest rates until 2024. And we're not even into 2023 yet, and they're already talking about being told to reduce interest rates. Drop your comments below. Let's have a conversation about this. I believe this is not out of the question, and this very likely could happen. And if this does happen, we're going to see things that you couldn't imagine. Drop below. Let's have a conversation about it. Hit the like button. Subscribe here and subscribe to my second channel. It's an interactive call-in show and a podcast. I have guests on every single week. So be sure to subscribe over there. It's a great show. And also LinkedIn, Twitter, Instagram, and TikTok up in the banner. If you need help fixing your credit, we would love to help you at cashnow.video. And if you'd like to make money from home working 1 hour per day, it's a copy and paste strategy. You don't need any experience. You don't need any social media following. You don't need any of that. We can teach you and train you. And it's completely free at cashnow.video/money. Join the Discord channel and then go to the Start Here channel in this little sub channel, and then you'll get everything that you need to start there with all the instructions. We're here to assist you. We have class every single day at 12 p.m. Pacific, 12 p.m. Eastern Standard Time. So be sure to go over there, and I look forward to seeing you. All right, guys, catch you in the next video.